All right, everybody. I appreciate you being here Saturday morning. We're going to get right into it here. So as we go through, like I said, this is going to be recorded. Riley's going to make sure you guys get a copy of this. And if you stay through till the end, I have a really good offer for some of you guys to kind of get the ball rolling. Like I said before we got on the call, I don't want this to ever come off as a sales pitch or anything like that. Today, the goal is very, very simple. We're just going to focus on educating and motivating. That's the theme here. We're going to talk about how Forex is different than stocks, to draw some comparisons for those of you that are new. And we're going to really kind of highlight, I think, my journey a little bit and how I can use my experience to shorten that learning curve for you guys that are new. That's really my goal. Like when I came into trading, there was nobody in front of me that ever was like setting a standard of anything. And now we have this group, we have multiple groups of people trading all over the world together, and it's become something that I feel like I can share with you guys to help you, like I said, shorten that learning curve. So let's start with why I got into trading, because I'm sure we all have some similarities here. I know some of you guys know my story, but I think we all can relate to the idea that life is about experiences, right? Some of us have been through some shit where you see that life can change for you in a second. It can end, it can start, but it can change in some way very quickly. So we have to enjoy the time that we have. So for me, I got into trading because I wanted to enjoy life and live those experiences, because I saw in my own personal life with my family how quickly that could change. Another main reason that I think we all probably relate to as far as why we consider getting into trading, why we want to make more money and become financially free, is that protection for your future legacy and that freedom that it gives you on a daily basis. And I hate talking about it almost, because I don't want to be that trader guy that's like, I'm financially free. But I think that at this point, it's been so long that I want to share it with you guys, because I feel so confident that other people can do it too. We have so much success right now. And I've got some testimonials in here to share with you to show you that. But you're seeing other people do this all over the world. Some people that don't even speak English are following what we're doing, and they're making money doing it. So I guess that ties into my third point here, which is we all probably agree that we're living through this information age now more than ever. You have, freedom of speech being suppressed almost because there is so much information available, so much information being pushed out there. And I was able to use that information to study what successful people had. And I saw that some of the influences that were around me weren't lined up with what those super successful people had. I would call them like the super free people. I got muted there.
Yeah, when I mute everybody, it mutes you too.
There we go. We learned something new.
Now we know.
Cool. Good to know. My point here, everybody, we all can relate to the idea that we want to get into trading for the money, but not because money's going to buy you a car, buy you a watch, take you on a trip. It's more for the freedom, the protection, and what that can do for your future family. Do you guys agree with me? Hit the chat if you agree with me. Right, tell me what they're saying in the chat. If anybody says no, they need to leave the webinar. So just to take you back a little bit, 2016 was when I really started to get this thing going. You see a picture here from my Instagram on the left side of the screen. There's Eric liking it. We had 16, 17 likes back then, but this was one of my first trades that I shared with people on the internet. So people started to see what I was doing on Snapchat, on social media, and people wanted to do it with me. People wanted to take advantage of this making money thing from home, from anywhere with a Wi-Fi connection, really, because people, again, we all relate to the idea we want to live out those experiences. So I had people over my house, and it grew into this thing where we had like 18 people in my apartment at one point, and then it just got bigger and bigger and bigger. And I was moving up in the idea that we were going to share this knowledge, get more people involved. And I kind of took the Gary Vee approach, which a lot of you guys know Gary Vee. You eat shit in the beginning to then prosper in the long run. And I knew the idea that running webinars online, like you see here, from my bedroom at the time in Philadelphia, doing this thing where I was trying to get more people making money from home and really having their own control over their financial future. I was trying to get people to buy into that idea, but it's taken some time. And it led me to working with a company in New York, which I was very grateful for. I learned a lot there, a lot of experience that I gained, and it continued to allow me to trade with people all over the world. So it drove home the point to me that now almost 4 years into it, I was now seeing the idea of, okay, we can make money from all over the world. And not only that, but we can teach these repeatable patterns that I've built to other people that don't even speak English. And then 2019 is where it really exploded for us. And I have to give Riley a lot of credit for that, because she came into my life. She said to me, we can do this on our own, and we can do this bigger than you even think. And I was like, yeah, really? Okay. But I trusted her, and it's taken us to this point now where we have over 300 people trading with us from all over the world. I've been able to meet people like Dr. Steenbarger, you see up there. We were able to have our first seminar. We were supposed to have our second one a couple of weeks ago, but this virus kind of screwed that up. So now it's kind of come full circle to this thing where We are able to be financially independent. We are able to have multiple businesses. And now I'm able to feel confident to put my name on the idea that I'm going to share this with people and hopefully get other people into this same position. Does that sound like some of you here, you're looking to achieve that level of financial independence? Because if you are, then today is perfect for you. We're going to educate and motivate, like I said, and I think that comes in two different ways. But before we get into that content, I just want to share with you, this is a testimonial from one of our traders, one of the newer traders with us. His name is Garth. He's from South Africa, living in Dubai. I actually don't even know when he's leaving Dubai, but he's someone who I really think a lot of people in here can relate to. He was trying to find consistency in his trading, trying to find, like he says here, an institution of learning. But he was struggling because a lot of people that sell this education stuff, this trading education stuff, they don't provide the precision that we do. And I think that's the thing that you're going to see that sticks out here in a few of these testimonials. Even this one, this is from Jake. Riley actually knows Jake. She introduced him to me, and that's why Jake works with us. 3 months into trading, his account was up 11%. You can see it right there. And he did 5% on a Monday. And again, Jake is one of the guys who's taking advantage of a lot of the free content that I put out on the internet, on YouTube and on Instagram. So he's not just learning from the courses, but you can see he takes advantage of the free value that I give as well. And look at what it does for his P&L. I mean, 11% is substantial. And then one more for now. We're going to talk about more testimonials in a second, but this is from Mike. Mike is a really good example for a lot of you as well who aren't trading. Mike was brand new as well, and he's just getting going. But look, up 4.8% on his paper trades. He won 4 out of 5 trades. The paper trades are those demo trades. It's fake money. So it's good to start there. So that's a really good example for some of you who have never traded, like Bill and the other guys here, like Wild Bill. That's a great example that could be you, with a paper account, just building that confidence behind a system. And we're going to talk more about the system as we go. But I know a lot of you have questions, like out of the 90 or 100 people that are on here live, the 300 that we're going to send this recording to, I know a lot of people have questions. What is trading? What is Forex? How much money can I really make with this? Is it risky? We're going to cover all of that. That is literally what I built this webinar for. So if you're excited that we're not going to blow the power again, that we're going to get this thing rolling, hit the chat, give me some yeses, let's get this thing going, okay? So first, the easiest way that I can explain this to you guys to understand how Forex is really happening every day in multiple places in the world at all times of the day, basically, other than on the weekend. And even on the weekend, sometimes things happen. This is a real world example. So here we have Germany, a company in Germany called Volkswagen. Most of you have heard of them, right? They make cars. If they want to, let's just say, go to Japan and build a plant in Japan to build more cars because they have a huge market in Japan that they want to service, what they would do is their board of directors, their CEO guy, all of them would go and they would speak to a bank and they would say, okay, we're going to need 20 million yen to make this happen. But we don't have 20 million yen because we're doing business in Germany, which is conducted in euros. So what do we need to do? We need to go to a bank and we need to exchange yen for euros. So we can, or excuse me, euros for yen, so we can pay our employees in yen in Japan. So we can pay to build the plant in Japan. Does that make sense to everybody? That's a real world example. They're going to go to the bank and they're going to say they need X million, X billion dollars in certain currency, and they're going to need that exchange to happen. So that exchange happens based on a price. You can see this is from Google. I took this picture a couple days ago. It says 1 euro equals 118.65 Japanese yen. So for every euro that they give to whatever bank they go to in Japan to get those yen, or whatever other bank in the world they go to that has the yen to give, they're going to get 118 yen. Okay, that 118, that is the price that we're trading on. Now, I'm going to go into that in a little bit more detail in a second, but this is another real world example of how we, even not just those big companies, people like you and me, participate in foreign exchange transactions. When you go to the bank, or if you go to a different country on vacation and you go up to the currency desk and you ask for euros or you ask for pesos or whatever it is, that's a foreign exchange transaction. And that price, that exchange rate, is the price that we're trading on. Does that make sense? Let me know if you have any questions about that before we go to the next slide. Ryan, do we have any questions?
Nope, everything's good.
Good. So now we know what Forex is a little bit, how this market gets going. So what is trading? Trading is the act of buying or selling any investable asset. It could be corn, it could be a CFD, it could be gold, any investable asset with the intent to get rid of it in a short period of time. This is compared to investing, which is the typical thing that most of you know with stocks or whatever it is, mutual funds. You buy and hold you hold it for a long time. You invest in that company or that stock or whatever it may be, that option, whatever it is, that's your investment, right? I mean, you can have cars that are investments to some people, watches, whatever it is, but that's for a longer period of time. So what we're doing is we're making short-term trades based on the value of that current asset if we think it's going to go up or down. That's literally it. Short-term trades, we're not looking to hold anything long-term. So then that leads to the question of how do we know if it's going to go up or down? The price that I just showed you for the euro to the yen, that price moves on a chart. We can chart that price with candles. You can do it with a line graph, you can do it with all different types of graphs, but we do it with candles. And those candles are going to create price patterns. And if we trade on those patterns, and if you find patterns that are profitable, meaning more times than not that you make money if you trade them in a certain direction, that's your trading business, that's your edge. And of course, it's more specific than that, but I'm hoping that this is kind of tying everything together here. So let me show you, this is just a typical chart that a lot of people are comfortable seeing, right? Left to right, you're looking at price movement plotted as just a line. This is Euro USD on the daily chart. But like I said in the last slide, there's really not enough information here for us to find any patterns. It's very tough to see. You could see some formations in there maybe, but really there's nothing in there that we would trade on. So like I said, we apply candlesticks to it. These candlesticks create character. That's what I would call it. Now with this character, we can see more detail, and that detail can create the patterns for us that we trade on. So we use candlesticks, not lines, just because they give you that piece of character. Now, when you see these charts and you're talking about trading, of course, the question of, is this gambling? That always comes up, right? That's what my parents used to think that this was for me. That's what a lot of people still think it is. And that's because people are very close-minded and they've already heard of one or two people maybe getting burned. But in reality, you have to look at the statistics. Most people are going to lose as traders. It's just the statistics. But I think the reason that most people lose as traders is because they approach it without a system. Most people will put some money into an account. And I know this is probably a lot of you listening right now. They'll put some money into an account. They'll think that they know what they're doing. They'll go to trade it without ever getting educated, without ever finding a system. They'll put the money in and they'll blow it. They might win a couple of trades, but in the long run, that money never lasts. And that's because there's no edge. What an edge is, and I've talked about this a lot on YouTube and stuff, but an edge is a repeatable and unique process that you apply to your trading every single day. It has to be unique to you. And I think I always call it the icing on top of that. You need to have repeatable details, like steps that you can follow within that edge so that it's very easy, because like we're all human. You know what I'm saying? We all do fall to those biases and make those mistakes. I mean, she sees me make we all see me, everybody makes mistakes. But if you can really systemize the trading, detail those rules, it removes the aspect of the gambling completely. Now, again, you can fund a trading account, click a button and make money. Without a system, that's a gamble. You might make money on the gamble. You might go to the casino and make money on the gamble. It's the same thing. But if you apply the system, precise entry signals, precise exit signals, details on how that repeats, that's where you create edge and that's where you separate. So a question I also see often, is there a future in trading? With this coronavirus thing going on, with the trade war with China going on, I mean, conspiracy theories out the ass right now, it's crazy, right? What we have to do is really go back to statistics. So there's a tri-annual central bank survey that is done of all the major central banks around the world. It was done last year in 2019. And that survey, and you've probably heard me reference it before, tells us that 54% at least of all the trading done in the Forex market is done by computer algorithms, which are basically complicated math equations that drive price. So what we're doing, the way that I like to envision, is we're getting into a market that is technologically more advanced than anything else before it. So I've always felt, and I've been saying this before Riley was even around, that Forex is the future. You have the stock market, and we're going to talk about this in a few minutes, and I have my doubts about that. But this Forex thing, this currency exchange rate, that doesn't disappear. It's not a company. It can't go out of business. So is there a future here? Absolutely. And I think that because technology is getting even more advanced, it's an even easier future for us to be a part of. You have smaller spreads. You have brokers that make it super easy to trade. I mean, it's just never been easier. And you have to realize Forex is relatively new. Like before 2000, people like you and me, we just couldn't trade Forex. You couldn't get any money into the market. You had to be a big bank. With me so far? Any questions so far, Ryan?
Nope.
Cool. Thank you. So let's talk about this again. I touched on a couple of things. We know Forex is the foreign exchange market. We know this is the market where currency exchange rates are agreed upon, and that's where we're going to make our trades. We know big banks, big companies, investment funds. These are the people that are participating in these transactions. Now, not everybody, like I showed you, Volkswagen is not trading currency. They need the currency to go put it back into the economy, to put something to work. So this isn't just traders, but there is a big market for traders. And I think the kicker here that we're talking about, and I'm actually going through this myself, is that if you can learn to trade one market and you learn the nuances and you see how detailed it can be, in that process, you actually gain experience, and that experience can be applied to other markets. Something you guys are going to hear me talk about a lot more on YouTube and Instagram in the coming weeks is my investments into cryptocurrency and precious metals. So you start to learn how you can trade and invest in other markets just from gaining this initial knowledge. Now, this is a good comparison of what the Forex market looks like to the stock market. Everybody knows David and Goliath, right? The size of the Forex market, I think, is the biggest advantage that we have over anything else. Of course, it's great that we can trade any time of day, and I'm going to go over a couple other benefits here, but the size is truly indescribable. You're talking 6 point something, let's just call it $6 trillion a day in turnover, because you have companies doing it. Like I said, banks doing it, investment funds, pension funds, everybody moving currencies, and traders. And then you have about 200 billion a day. So we're talking 200 billion, which is a lot, but 6 trillion. So it's way bigger. That plays into one of the reasons why Forex to me is like the best market to trade, especially for new people. The next reason would be the time zones. We can trade Forex 24 hours a day, 5 days a week. The only time you can't is on the weekends. So if you're somebody here listening who wants to maybe start trading part-time, but you have another job, you could trade after work. You could trade before work. You're not held to the New York stock market hours. You're never going to be held to just those hours. You can, and there's more volume there because logically more traders are trading, but that doesn't mean you can't trade at night and in the morning before you even go to work. You guys see me, I'm up at 4 o'clock sometimes trading, and I'm making money before everybody even wakes up, and I love it. So it's something that I think you guys could take advantage of as well. A couple other reasons that I think Forex is just so different from stocks, not just the size and the hours, the manipulation I think is just way less. And if it isn't way less, it's that these algos, those robots I was telling you about, they create these patterns of price, which makes it easier for us to take advantage of, less spikes. When you're trading stocks, you could be asleep, a press release could come out and it could gap down 30% and you could lose who knows how much money from that. It's just completely out of your control. Another difference is most people only know stocks as far as buying them and holding them, or buying and trading them on the long side. With Forex, I'm going to show you in a second, you can buy or sell very, very easily. Like there's no difference. So if we see a pattern that creates and it's coming down, we can short that. If we see a pattern present and it's going long, we can take that long. Very easy, it's no difference. And then again, another important thing to note, when we're trading stocks, you're going to trade Apple, you're going to trade Microsoft, you're going to trade Google. You're not going to trade Euro USD. So currencies are always in pairs, two currencies, because you're trading an exchange rate between those currencies, and stocks are always going to be one company. Now, this is something I did speak on a little bit, but it's important to understand the hierarchy of this market because it's different than the stock market. The reason it's different is there's no middleman. There's different layers to this market as far as how pricing gets pushed down, but there's no centralized exchange as there is in the stock market. This is an over-the-counter market. So when we're taking trades in the spot market, we're trading with other traders in that spot market, and that price that we get from our broker, and I'm going to talk about brokers in a second, but that price is passed down from major banks, central banks, then to the Reuters dealing desk, then to the medium-sized banks, then down to the broker, and then down to us. And because we have this electronic, technology, digital age that we're living in, the prices are very, very cheap because the quantity of how many orders they're passing down is so large that they need to make such a small piece of those overall big orders that's how it adds up for them. So they're making money as the price gets pushed down to us at the bottom of this hierarchy, and we're still able to go in and make money, almost like the small fish, the big fish in an even bigger pond. That's the way I would look at us. I did say this already, but understand that before 2000, you couldn't even trade Forex if you were you or me. Not only because of the internet, how it was still new, basically 5-6 years old at that point, but you needed $1 million at least with an institutional investor to trade currencies. So this is a new market, and you really have to understand what that means. It isn't a new market in the sense that it's new to the entire world. Currencies have been exchanged for years, right? The exchange rate of currencies, that goes back to Egyptian times where we were exchanging just gold coins and silver coins. So this idea of currency trading is not new, but it's new to us because of technology, because of those brokers passing those prices down. That competitive edge has just shrunk because of technology, because of the internet. So it's an amazing opportunity for us. And a question that we have to also touch on here about comparing Forex to stocks. People ask me, is it riskier than stocks? And I would just leave this information up to you, and you tell me if it's riskier. If you're trading a stock and you buy that stock, you hold that stock, you're anticipating the stock that it's an accurate evaluation of that company and that it's going to continue to go up over the long term, which for a lot of stocks it does. And everybody tells me for the last 100 years or whatever, stocks have been going up. Why wouldn't you invest in stocks? Just because it's been going up doesn't mean it's going to keep going up, especially right now as we host this webinar, and it was called what? How to make money during COVID-19. Like with everything going on, 16 million people unemployed in America right now. This is the one time I think if we're ever going to question the stock market, it can be right now, because stocks fell off 35% and then bounced up 25% even as we put out terrible unemployment numbers. So it's almost like these valuations are running on their own merit. What's controlling that? I don't know. I'm going to leave that up to you to decide. You tell me if it's riskier. Also think about this. Currencies are in physical circulation. Shares of stock are not. Currencies aren't going, you're not going to melt all the currencies down, burn all the Swiss francs. It's not happening. You understand? And also, one more thing, companies go out of business, right? Currencies don't. Take a look at this. This is the largest companies by market cap around the world from 1980 to 2018. Look at how many names just from before 2000 are still around 20 years later. Not many of them. So how are you going to pick a stock that's really going to be around for 20, 30 years? You're not. You're going to have to change that investment. You're going to need to move things around. And that requires a lot of, not guessing, but a lot of hoping that you pick the right decision, hoping you pick the right company, right? That'll ride the wave and be a good investment for the long term. That's not really the way that I'd like to play with my money. What do you guys think about that? I mean, it just doesn't make sense if we're really taking this seriously. You know what I mean? Compare this to the first Forex transactions being established back in the 17th century, 1600s, guys. And here in America, I thought these pictures were cool. That is the same building. I mean, it hasn't moved. That is where, it's in Maryland, where the first Forex transactions in the United States took place. Isn't that, I mean, that's pretty cool. Alexander Brown and Sons. Now, again, it was happening in Europe before then, but even here in America, this goes back to the 1850s, guys. So this is well established. Does that make sense so far? So we'll keep moving. I see the comments, we're good. We're trading two currencies, like I said, not a stock. So the currencies are always going to be paired up. There's always going to be two. Here, you're looking at an example of euro to the dollar. So when we write that, it's EUR-USD, euro to the US dollar. Just pay attention, a couple other major currencies that you're going to see, GBP. If you follow me on Instagram, you probably see me, GCAD, GN, GA. That's GBP, AUD, GBP, CAD. So that would be pound to the Canadian dollar, pound to the New Zealand dollar. So all of these currencies all over the world have this exchange rate. Guys, you could trade the US dollar to the Turkish lira, but those foreign currencies where those, the country that they're based in is not as economically strong as, say, the pound in Europe, in the UK, those currencies are going to be tougher to trade, those exchange rates. So we really want to stick to these main currency pairs. Even AUD is another one, Australian dollar, like I said, that you could consider a major currency pair, and those are always going to be easier to trade. And that's because the foreign exotic pairs, USD to South African Rand, the volume isn't there, but the volume is in these pairs, and that's why we want to focus there. So a lot of you have also heard me talk about pips, but you never know what I'm talking about when we say it moved 20 pips, it moved 30 pips. The reason we count pips over anything else is because the movement in pips does not determine how much money you make on the trade. The position size that you take on the trade determines how much money you make. The pip movement is just how we measure the distance that pattern can play out for us. So when you're measuring pips, I know some currencies are quoted differently. The way to remember it is that the second digit from the right, here it's that 4, that is your ones digit holder. The next digit to the left of that, which is the 3 here, that's your tens digit holder. So take a picture of this. You've seen me post this before, I'm sure, but screenshot this if you need it. That's how we're going to count pips when these numbers change. The number all the way on the end, all the way on the right, that's a fraction of a pip. We call it a pipette. It's not really that important, honestly. So let's just go through a couple of examples because people like to tell me, what the hell are pips, Austin? I hear you talking about pips. I want to talk about dollars. We're going to get there in a second. If you had a currency priced at 1.12345, and that 4, the second digit from the right, changed to a 5, that's an increase of 1 pip. Pretty simple, right? How about this one? 1.53263 to 1.53163. The 2, 6 becomes a 1, 6. That's minus 10 pips. Okay. Now, last one, 112.523 to 112.457. Again, the second digit from the right is your ones digit. The next digit is your tens digit. So here, you're looking at minus 0.66 pips. Make sense? So you can take the higher number and subtract it from the lower number to come up with that distance in pips. And it starts with the second digit from the right. So now you know how to count pips. Now you know we're trading currency pairs. I hope all this is making sense. So now when you watch my stories and you hear me talk about this stuff, it shouldn't sound too crazy. You remember when I talked in the beginning about going long or going short, buying or selling, where a lot of people just look at stocks as I'm going to buy it and hold it, or I can only trade it long. In Forex, it's way different, like I said. So here you have two different prices always, the bid and the ask. The bid is the price that buyers are willing to pay, and the ask is the price that sellers are willing to pay. So if you want to sell it, you would sell this Euro USD based on Hollanda's pricing. You're going to find out who Hollanda is in a second. You'll sell that at 1.08698, but you would buy it to see it come higher at a different price, 1.0871. The difference between those two numbers, that's your spread. Now, some brokers will charge you the spread, and that's where they make their money. Others won't. Some will charge you a commission, and that just depends on the structuring model, the pricing model that you come up with the broker. But now, let's take this a step further. We know we're counting pips. We know we're trading pairs. We know we can buy it or sell it. So how is the position size measured? Because now we want to know how much money we can make. Stocks are traded in shares. So when we talk about currencies, I want you to think of them as units. That's what we call them in the currency market, not shares, units. So 100,000 units of a currency is equal to one lot, which we would call a standard lot. 10,000 units of a currency, 0.1 lot, is a mini lot, and 1,000 units of currency is a micro lot, 0.01. Each size, and you could do 90,000 units, you could do 101, you could do any amount of units you want. Each size will give you a different lot size as they group that together. And that lot size, that overall amount of units that you're either buying or selling, that determines how much each pip of movement is worth in dollars. Okay, so we're going to tie that into a chart in a second. So you want to know, okay, that makes sense. How many units do I need to trade then? Well, the position size you take, how many units you buy or sell, is determined based on two things. One, the quality of the setup, because not every trade is the same. I heard that there is a pretty famous Instagram trader for his fancy cars, but not for his trading. He's an Instagram trader though, and he says that he doesn't believe in risk. And it made me want to pull my hair out, because there's no way he's a trader if that's what he really thinks. Risk is everything. If you can't measure risk reward and control your risk, you're not trading, you're gambling. I don't want to go back all the way in the slides, but you need a stack of chips then. Go to the casino with it, don't come here. But if you're able to understand that not every trade is the same, and we do have to grade our setups to then determine, hey, this is a better trade than this, I should put more money into this. That's the first step of this, to figure out how many units do you need to take. The second step is by looking at the total amount of money in your account and understanding what risk percentage you would put on that setup, depending on number one, the quality of it. If it's a great setup, 2%. If it's not a great setup, let's just put 0.5%. That will tell you how many units you could trade, because then you'd work back. I have, $20,000 in my account. What's 2% of 20,000? And you can work the numbers back from there. So before we go forward and throw this into some charts, let's review. First, do we have any questions? Any questions, Ryan?
No.
Everything should seem pretty clear. We're trading the exchange rate between two currencies. We can buy it, we can sell it, doesn't matter. We can trade 24 hours a day, 5 days a week, and we're measuring movement in pips. The second digit from the right is the most important, and we're determining the position size based on a percentage of our overall account, which is then going to be based on the quality of that setup. Does that all make sense? Yes? Thumbs up, yes? This is clicking. Imagine if there was somebody that said this to me when I started trading. This is like the opposite of what people were saying when I started trading. So now let's talk about how much money you can make, right? Because that's what everybody loves to talk about. Let's say you have a $10,000 account and you saw one of these setups that you thought was a great setup. To me, that might get 2% risk. And again, in the courses, I tell you every step of this, every step of the way. I'm not trying to be vague with you here. It's all very detailed in the courses. But let's just say you're going to put 2% of risk on this really good A1, that's what we call it, A1 breakout. The risk then would be $200. So in a situation where Your risk is 1R at $200. We're never taking a trade unless we can get 2R, which would mean I'm not going to even take a trade unless I can make 400 for my $200 of risk. Does that make sense? So would you do this if you would win 7 out of 10 trades? What do you guys think? What are they saying? Would they do it?
They're all saying yeah, of course, yeah, hell yeah.
Good, exactly. Of course you would. This is just statistics, right? So how do you make that actually happen, right? How do you take it from the gamble to the statistics? That's where the system comes into play. So let's talk about the system. First, we're going to look at an example here of Euro USD. We're looking at a position that we were buying. So we're going long at a price of 1.08669. I have that circled over here on the right side. That's where we were looking to go long. Let's just say right here at the close of that candle. The stop loss here is 17 pips. See that red 17.1? The point isn't there. That's just the way that TradingView does it. But you always have to add that decimal, okay? So 17.1 is your stop loss, and it goes 83.3 pips. So here in this situation, if you were to take advantage of this whole move, you're risking $170 on that 100,000 units, and you're making 830. Does that make sense? We just took the units, the stop, the risk, and the reward and put it to real money. We just counted pips, right? Because we counted 83 pips because it went from 1.08669 all the way up to 1.09502. Now, TradingView measures that for you. That's the beautiful thing about technology. Like I said, you don't have to do that math in your head or on a calculator. It's 83.3. So you risk 170 to make 830. Who'd like to do that? Yes? Good. So let's talk about who holds your money. I mentioned Owanda already, right? This is going to be your trading bank account. No one explained this to me when I got started. I never understood who should I trust for a broker, Trader's Way, Hugo's Way, FX Way, Self Way, whatever, all these different FX ways. I was like, bro, where the f am I putting my money? Owanda is a regulated US broker, and the regulation part is huge. I know a lot of you guys are international that are watching this. You got to find a broker that's regulated in your country. You can't tell me you're trying to build a long-term business if you're not with a regulated broker. If you're doing flip this account challenges with high leverage, you're asking to literally blow yourself out of the water and then have a bad taste in your mouth about trading. What I'm trying to do is show you, you want to get with a regulated broker and build something substantial for the long term that can give you what we talked about at the beginning before I blew the power, the financial freedom, the freedom to do whatever you want, and then that legacy building skill that you can build wealth on top of. It starts with a regulated broker, because think about it. You're going to grow this account. If you're serious about this, you're going to take this account to 100 grand, then 200 grand, then 500 grand, then hopefully $1 million, then 2 million. Are you going to do that with a broker that's in Cyprus that could just shut down and take your money? No, you need to be with a broker that's working with the government here in the United States. As you know, messed up as they are for some of the things that they do, that is the game that we're playing. We live in this country. That's the system we need to operate within. So the regulated broker is a must. Now, talking about who holds my money, how much money do I need to start? Realistic expectations are big here. I never want to overpromise. I'd rather you come in and just exceed expectations. So keep in mind, big money is always going to make big money, and small money is always going to make small money. If you come into this with $1,000, you are not going to take that 1,000 to $1 million in your first year. It's not happening. But if you approach it with, hey, this is my 1,000, I'm going to fund this because I can afford to lose this money. It's not my rent money. It's not my food money. I can afford to lose this. And I'm going to pump extra income into this as I trade it well and grow it. Well, now you're going to trade it well and you're going to put extra income into it. It's going to grow even faster, and you're going to build that piece of, like I said, legacy building, like foundation that you can then say, yeah, I'm done with my job now. My account is big enough to provide me with the income I need, and I can then still make excess through other sources of revenue. And that's the beautiful thing about this. I didn't talk about this too much, but a lot of the people that have worked with us, they're now actually doing 2 and 3 other businesses, something that they actually enjoy. I think of Ryan, he's probably listening, out in Vegas. Like, he's teaching people guitar now because he has the freedom to just trade and do that. He was not able to do that when he had his other job. So that's just one way. And like even us, like Riley is able to do her Mindful Ladies business that she's starting and build this community of like amazing girls that are really trying to take themselves to another level. And she's only able to do that because of the freedom that we have from this stuff. So I think it takes you to the level of like, okay, now I'm making some money trading, and now I can start another business, generate another source of income, and then build on that wealth in that sense. So before we go too far down that path, how do you know when to trade? This is a testimonial that I just was very grateful to get. This is from Aiden, one of the newer members. Like, look what he said. After failing for 2.5 years, blowing multiple accounts, I'm finally profitable, and it's all thanks to Austin. And like, I hate the toot my horn shit. For those of you that actually know me, you know I don't do that. But these things speak louder than anything I could ever say. And what he learned with us is 4 things: exactly when to get in, exactly when to get out, where to put his stop loss to control his risk, where to put his take profit to get taken out in profit more times than not. Those 4 pieces are what nobody else is teaching, and that's why he's making money with these systems right now. So let's go through another example. This is Euro GBP just a few days ago. Here, if you look at the risk, 9.0. See, it says 90 at the end. Again, we add that little decimal. So here, 9 pips of risk. By the end of the day, not even 2 or 3 hours later, this fell 36 pips. So here, with that same idea from earlier, we're risking 200 to make 800. Sound good? Right? So if I could show you how to find that entry signal every time it presented, every day between 3 and 10 a.m., if I showed you how to find that and you could make money 7 out of 10 times trading that, wouldn't you want to put money into that and not put money anywhere else, not gamble with any other edge or any other indicator, any other fucking crazy thing that people try? Systematic. This is a business. This is like, seriously, I mean, you should be working with an accountant. You should be trading as an LLC. All of those pieces will come in the future. But for today, how do you go forward taking all this information I just gave you and apply it to actually start building, right? And it's tough for some of you. I know you're older than me, so you're like, how do I do this? I'm older than him. Am I too late? You're not too late. We're still early in this. I believe that. We're not like doing some crazy crypto thing where I'm trying to get you to invest into a fund. I'm saying get into this market and start building your family's wealth now. You're going to regret it. And then you're going to look back at times like this and you're going to be like, fuck, did I put enough money to work? I had an extra 2 grand I could have put into an account and started that. So, damn it. You do, like, literally in my journal a couple days ago, I wrote, am I putting enough of my free capital to work? And I'm not. So what did I say to her this morning? We're going to be buying some of this precious metal. We're going to be buying some of this crypto stuff, even more now. Put the money to work. So how do we do that? Number 1, this is what I would do if I was in your position. I'd get educated. After everything today, if you still don't like me and you don't want to come into ASFX, go find a team that's talking similar to how I speak and will give you that precision in a system that you can apply. If they're just going to show you how to trade support and resistance, don't buy it. You can learn that for free on the internet. If they're just going to show you how to draw trend lines, don't buy it. And if it's got some corny name on it that it's going to accelerate something or take what, like some corn, just stay away from it. But if it's systematic and it's detailed, I think that's when you're on the right track, and that's what we offer. Then once you have that education, you want to implement it. And this is always the way I go. If you're brand new to trading, demo account first. Paper money. Don't put real money into this. Buy the course. That's your only cost. I don't charge you a monthly membership fee. And at the end of this webinar, I've got a great offer for you. So you're going to save money there too. One-time fee. You're in with us for life in a community of people that's going to actually support your growth. Then once you start learning, you put it to the demo. You can, when you're confident, put real money in and see if it's for you. And you don't need to put all your free money in either. Start with 1,000. Okay, I'm up to 1,500. I'm going to add 1,500. Take myself up to 3 grand. Okay, I'm up to 6 grand. I got a couple thousand extra putting aside. Let me put that up. We're up to 10 grand. You see what I'm saying? It's a process. It's not, Austin's got the holy grail. Let's put this 10 grand in. Let's get this fucking money. It's not like that at all. I promise. It's a process. And then the third step is you want to sustain that demo to real transition by finding a group that you can grow with. We've had a lot of success recently, and it makes me like, not emotional, because it's not like that kind of a feeling, but it makes me hungry because I'm seeing people sustain their growth with the group that we built at ASFX. So I'm like, this is a good product. This works for people. This is making people money. So it makes me hungry to share it. That's literally why we threw this free webinar together last week. That's how fast, it was just like, we need to get this out to people. So as you go through, this is a funny thing. You have to keep in mind, before I choke and die, stop laughing at me. You have to keep in mind that there's a lot of scammy shit in this industry. And that's why I stand out. I stand out to the point where they steal us and they make weird fucking accounts like this guy did and try to scam people using my pictures. So you have to be careful, not just of getting scammed by a fake me, which I would hope that you wouldn't now that you've heard the real me talk and you would just come to me or Riley. But in this industry, people will use Photoshop to fake P&L, fake a profit and loss statement. It's so easy to make you on the other side of this screen think something. I can create an image any way I want with enough effort to paint a picture for you and sell that to you. I can, anyone can. So you have to be very, very, not cynical, skeptical. If you can approach everything with a skeptical eye, hey, just let me verify this, you're not going to get scammed. And I think that you have to also keep in mind that, like I said 5 times already, this is not an ATM in your pocket. The guys that sell you that shit, those are the people I'm saying steal my pictures and do this stuff, okay? This is not an ATM in your pocket, but it can be more than that for you. This is what it's been for me. I just threw some pictures together from our last year. We had our seminar in November. Riley and I got our house out here. We've taken a couple of trips, Virginia, South Carolina, Jamaica, Punta Cana. And like, I'm not saying that I hate even the fact that I have to do this part of the slideshow, but I want you to see the freedom that it's given me and see that it has nothing to do with money in my pocket, get rich quick. It's long-term wealth building. This is a skill that's going to stay with you forever. You will not forget how to trade. If anything, you're just going to go trade more in other markets with your free capital that hopefully you can generate here through trading. So let's talk about the topics that I have in the beginner course that we cover. I think it's really important that you understand what you're getting yourself into. The A1 system, that is the entry, exit, and risk management system that we teach in the beginner course. We have 2 courses. The advanced course has 2 other systems in it, but for you guys here today, I didn't even want to go into that. I wanted it to be just like brand new people. Let's get them something that's going to make them money tomorrow. Not necessarily tomorrow, but once you finish the course, go through the demo, go through those 3 steps. That's what I mean. Make you money once you finish the process. In the course, you're going over all the terms in the world, every term that you're going to need, because I need you to understand the language. The language is what creates the power for us to trade these systems. You'll hear me talk about RSI, L50, overbought, oversold. These are language. It's a unique language that gives us power to interpreting a chart. Think about how powerful language is, guys. I can't even go into it because I'm not the psychologist. Riley should come up and do the part of the webinar for that. I can't even go, like, I just know how powerful it is. In the course, we're going to talk about trading the news, because I know a lot of you guys ask me, do we trade NFP? Do we trade the FOMC? Do we trade the unemployment numbers? We talk about all that stuff in the course as well. I show you how to read the candlesticks, very, very basic, bullish versus bearish. And I show you 3 profitable indicators that I'm using still today. This A1 system still works. I used it last week, that I'm using actively in the market. So all of that is detailed in the course. This is what the curriculum actually looks like. So when you sign up, you see each chapter is detailed with its time. And then at the end, I actually threw in a webinar for you guys that we paid, that we charged people for, but I threw it in to give to everybody that goes through the beginner course as well. So that's the first piece. The second piece that I think I should really make sure we touch on is the mentorship. This is what I think has led to a lot of success, not just for myself, but in other traders that are brand new to Forex, because there is no shortcut ever. There's never going to be. But mentorship can definitely shorten your learning curve and get you to a point of at least profitability way faster than if you try to go about it on your own. I did go about it on my own. I had to go about it on my own. There was nobody that had a course like this detailed out with testimonials right there for me to just sign up and take and start making money. Nobody. But that's why I'm here. That's why I feel like obligated to share this, because I have the ability to not only trade well, but also be an entrepreneur, put this together for you guys and impact people like Marsha, like Ryan, like Gwendolyn, like Santiago, like Victor, like Forrest, like all the people who have been working with us. I mean, Marsha came to us from IML. Some of you guys know what IML is. That's that marketing bullshit. She came in and was like, I want to really learn how to trade. That's what the system in ASFX gave her. Here's another guy. This is James from South Africa. He was on the fence for so long. And I was like, James, you got to just jump, bro. Like, I promise you, you're not going to regret this. And that's where I'm at now. I'm like, we're not giving refunds for a reason. It's that simple. If people were unhappy, they wouldn't leave reviews. Randall wouldn't say great content. Watch most chapters twice to make sure I really understand it. Look, Chris, wow. There's so much to think you know, but clearly you don't after going through this course. The course is amazing. That's what Brandon said. 10 out of 10. JP, another guy who's like a friend of mine for how long, waited to finally jump in. Now 5 days ago, fantastic course, super proud of what you've accomplished over the years. Now he's finally in it, literally 3 days into JP being in the group, his markup, pristine. The detail in it, exactly what I knew he could do because I know him and I know he has run successful businesses before. So he took that skill of diligence, research, discipline, hard work, took all that he has in him and threw it into trading, and now is seeing that success. This is David from the UK. He said, better than any Udemy course. Tyler, one of our coaches, he killed it. I mean, like, this is what we're doing for people now too. You come in, you take the course. If you do well and you're making money with it and you're sharing that with people, we're going to pay you. This is a win-win-win. I want this in everybody's hands. I think that as more people get on the internet, we can just impact more people's lives. It's a win-win because I can then pay Tyler for sharing this with other people. That person gets the information that they can use to start making money trading, and I get more people into the group, and we become more of an international brand. It's, like I said, there's no downside to this. So there's levels to working with us that can take you further, put more money in your pocket, another stream of income. And then we do stuff together as a team where we even talk about tax planning, estate planning, building a business, even like this. With all these free loans right now here in America because of the stimulus, if you have an S Corp and you're paying yourself through an S Corp, you could apply for these loans and then pay yourself because they're used for payroll, and then those loans could be forgiven if you get approved for that. That's what's going on right now. But that's professional level shit. That is not average Joe stuff. Most of you listening will probably have to rewind that to really understand what I just said. So when you're working with people like us, that's the kind of level of professionalism that we're going to take you to. That's the level of professionalism that I hold myself to. And I think that's why we're seeing so much success. Even here, this is Adam, another one of our coaches. I love the course. The way you describe chapter 7 and 8, light bulb moment. That's my favorite. Santiago in our call last week, he was like, bro, I got light bulbs everywhere. I got them everywhere. I was laughing so hard. I was like, yeah, that's exactly what I want, dude. I want people to feel like, wow, that's it. That's the pattern. That's what I'm seeing. That's where I put the money. Okay, let me try it. Wow, 4% this week, all because I took 3 trades. That's it. It's that easy when you have a system. I'm not saying it's going to be easy for everybody. I'm not trying to sugarcoat it or make it seem like you're going to hit the ground and make $1,000 next week. You could, depending on how much money you start with and depending on how fast you go through the content. But if you really commit to this over the long term, I think you're going to see the results in more than one ways.